Hello, traders. It is Wednesday, July 3rd, and we are doing an early live event because the market is going to be closing at 1 o'clock p.m. Eastern time today. So let's see if we can get a little action this morning. I'm going to take a look at the market right away because we have ISM services coming out right now. And you can see this is a 5-minute chart of the S&P 500. So let's see if that news has any bearing on where the market goes from here. Other than that, I think the action is going to die off pretty quickly today. So we might get, I don't know, maybe an hour or two worth of activity. And we are about 10 points from the all-time high on the S&P 500. So let's see what happens here. Got a little bit of a reaction in here, but doesn't seem to be anything much. So I am going to check to see where that number came out. And they were looking for 52.6. And the number came out at 48.8. That is in contraction territory. This is interesting because we had a very light number 2 months ago. It was in contraction territory, if memory serves me. It was somewhere around the 49.5 level. Very weak number. Then last month we came out and we had actually a decent number. It was at about 52.6. 48.8 puts us back in contraction territory. The reason this is important is because 80% of our economic activity is tied to the services sector. And the reason that I pay particular attention to this number is that it is a survey. So it is one of the very few forward-looking numbers that we get. Almost every other economic release is very backwards looking. It's historical. This is actually a survey of supply chain managers, purchasing managers. So they're indicating what their intentions are for the future. So this is a light number, but the market's not really having too much of a reaction. I went into a 1-minute chart. You can see here how it's trying to push higher. We did have global markets were up earlier overnight. So we've got a little bit of a springboard for that. We always have to be careful when we have the market testing the all-time high, especially when there's any type of little early gap up or movement. Oftentimes what we'll see is we'll see an initial reaction, a move higher, and then as we get to that resistance level, we start seeing some selling pressure. So let's watch to see what happens with this 1OP indicator right now. We're getting a little bit of a spike. We want to see that bearish cross. If that bearish cross takes place and we start to see some stacked red candles, then we may have a chance for a market pullback. In general, though, backdrop is quite bullish. You can see yesterday we opened and it was kind of a yawner, and then Powell was speaking, and the notion was that based on his speech, the market feels that a rate cut might be coming in September. Where have I heard that before? The market has been looking for a rate cut for over a year, and they've been pricing that in, and the market has been wrong. So if there were a rate cut coming, then the big question is, why in the heck has TLT, the US 10-year Treasury, been pulling back? Why did TLT break all of these major moving averages? You can see how it broke below that earlier this week. That was the action from July 1st, Monday. The bond market has rebounded a little bit since then. So you can see how it's trying to get back through these major moving averages. That's a pretty significant trend line right there. So if bonds continue to move lower, that's going to put pressure on the market because that indicates that yields are moving higher. If the market were really pricing in that rate cut in September, you would expect to see bonds doing better than what it's done in the last 4 days. So again, this pop here is related to Powell's comments yesterday. and the notion that they may be ready to cut in September. They have a lot of flexibility right now, and we've got kind of the sweet spot for them where inflation is starting to come in, yet economic growth has been decent with regards to jobs. We got ADP this morning, 150,000 jobs created during the month of June in the private sector. We have seen initial jobless claims ticking up. They're probably around 238,000 has been the 3-week, 4-week moving average. So that should weigh on the jobs number Friday. I'm expecting to see a number somewhere in the 150K range. Analysts are expecting a better number, almost in the 200K range. So we'll see how that plays out. Know that a lot of traders, with this being an abbreviated session today, they're going to try and get out early today. Tomorrow's a holiday. They'll probably trade the first couple of hours on Friday, and then they'll be gone. Many of the traders have already they'll be taking a 4-day weekend. So I think that trading activity Friday is going to be pretty minimal. That means that with low volume, we've got a chance for choppy conditions and for the market to move around. In terms of what a good number or a bad number might be, I don't think it's going to have a major impact, especially if it comes in around 150K. Hourly wages, we'd like to see that somewhere in the range of 0.3%. I think that's probably where it will come in. It's not really hot or cold. It's kind of a neutral number. 0.2% would be better from an inflation standpoint because wages are the highest input cost for manufacturers. So we'll see. That's kind of what I'm looking at right now as far as the week unfolding. And then next week, we really don't have a lot going on. We've got earnings coming up. JPM will release earnings July 12th. That kicks off earnings season, but we don't really get into the meat of earnings season for a few weeks. That's when mega cap tech companies are going to report, and that also coincides with the FOMC statement on July 31st. So I think that last week in July, first week in August could be our next window of opportunity as far as getting some kind of catalyst, some kind of market movement. So I'm going to take a look very quickly at Starbucks because I highlighted that yesterday. And you can see how the stock has been a little bit lower. We were looking at the August $80 puts. And so let me bring that up. Take a look at where they're currently trading. And the August 80 puts are just about where they're a little bit higher. 540, 550 was where these puts were offered and bid when I did the video. And you might look at this chart and go, well, what's the big deal? The stock didn't really drop. This is a longer term swing trade that I'm putting on. And here's why I like it. So I'll just go through the review very quickly. Here's one reason I really like it, and that's the stock has been relatively weak versus the market. And here you can see how the market has been in a gradual uptrend, and the stock has been in a gradual downtrend. Big sell-off after the earnings announcement. Stock has a meager, wimpy bounce with mixed overlapping candles. Can't fill in the gap. Resistance at the 50-day moving average. And you can see how the stock has been continually drifting lower now, and it's below a VWAP-E. This is a longer-term position, and the reason that I liked it was because the option implied volatilities were very cheap. And you can see that 23 is the option implied volatility. So here's my thinking. Let's get into a little market analysis. This is a longer term position. I'm looking for it to come down to that $72 level. But in all honesty, if I could make a couple of bucks out of these options, you pay $5.50 for them, you get out at $7.50. I'm happy with that. I don't need to push the envelope on this trade. And I'm not fearful that the stock is going to rally. I'm not fearful that the market's going to make a gangbuster move higher. So let's kind of get into that analysis right now. And you can see how the markets had this breakout to a new relative high, had this big bearish engulfing candle, and it was able to pop up here back in early June, but it really hasn't gotten very far since then. Lots of mixed candles in here, very patchy. You got these tiny little bodied candles in here. Yesterday, we had a nice bullish trend day. Certainly didn't look like much at the beginning of the day. It looked like we're getting ready for pre-holiday trading, and now we're testing that high. And you can see every time that we test the high, that was a gap up and a gap reversal, a gap up and a gap reversal. So we have to watch this very carefully to see if any kind of selling pressure starts to materialize today. Market's not open very long. We've got global markets in positive territory, so there's nothing really weighing on the market today. We had TLT actually bouncing. So overall, I'm not really seeing anything that tells me that the market is going to roll over today or have a nasty day. And as far as my strategy right now, I'm looking at option IVs. They're very, very cheap. And that's because the market hasn't gone anywhere and it has been gradually drifting higher. We'll put up VXX. And there you can see how VXX is continuing to decline. Very, very low levels. That means that no one's worried about a market pullback. Option premiums are super cheap. So from an option strategy standpoint, selling out of the money, put or call premium is very, very difficult right now because you have to go very close to the money to get the type of credit that we're looking to receive. You're not properly being rewarded for taking that risk. Okay, well, then we have to be premium buyers. That would be correct. With the market at an all-time high or very close to it, I'm going to be looking for signs of weakness. I'm going to be looking for a little dip in here during the course of the next couple of weeks. What I'd like to see is a breakdown below this horizontal support level right here. So I'm going to set an alert. When the market breaks below that support level, we should fill in this little gap and we should get some follow through. We could even possibly come and test this upward sloping trend line, comes into play somewhere around the 535 level. So on any type of little hiccup, any type of little dip, any little flush out here, you can see we've got them. Like this last bearish engulfing candle, we had a few days of follow through. Well, if we get this type of price action on a weak stock like Starbucks, that stock is going to move lower, and it's already got a full head of steam. Upward sloping trend line, breach to the downside, all the other indicators that I had mentioned to you. So I'm really looking for a little bit of a market dip in here, and I could buy some cheap puts right now on stocks that are already showing weakness. I like that. That gives me an edge to the trade. The other thing that I like about this particular position is that I've bought options. You can see August 6th is the next earnings date. So I bought the August regular monthly options, which expire after earnings. And that means that option implied volatilities as we get closer and closer to that earnings announcement are going to start to climb higher. That is going to give me an additional little edge. Of course, I don't want the stock to rally before then. I want the stock to continue to drift lower, but any time premium decay is going to be offset by this increase in option implied volatility. So that gives me a little added cushion. Also, as we start getting through mega cap tech earnings in August, August tends to be a fairly bearish month. So does September. You get the FOMC makes their statement and then they disappear for a month and a half, and the market gets kind of nervous about where interest rates are going to go. Washington, D.C. is vacated as the rats flee to go on vacation. So there's no one home minding the shop. And that's why we start to get some nervous jitters August and September. Plus, we've got the election coming up. So I've got seasonal weakness also possibly taking place in August, and that should also benefit the position. So if we go back and take a look at what happened last year in August, and this may not happen this year, it doesn't happen the same way every year, but usually by the middle of August, you start to see some weakness. And this is July 27th. This is when mega cap tech companies were releasing earnings last year. Long bearish engulfing candle, closing on its low, and then you can see the follow through selling that we got. So this is the pattern I'm watching for. I want to see the pattern I'm watching for as we get later into July and early into August. I'm looking for that rejection off of a new all-time high, and that should set us up with a little bit of a pullback as we head into late August, early September. But before that, you can also see that the markets had a couple of little jitters in there early in July. And then as earnings season starts to approach, you start to get some strength, and this could fuel us to a new high. So just looking for any kind of opportunity to buy cheap options on stocks that are in a strong trend. And because the market is near its all-time high, I am not as interested in buying options on stocks, cheap call options on stocks that are in an uptrend. But I do have a play today that I'm going to be looking at. And so why don't we get right into the play? We'll go back into the 5-minute chart, see what's happening. Tiny bodied candles. This is not a strong rally. All of these gains can be wiped away very, very quickly. So I wouldn't be overly aggressive buying this, but we did get through the news. The market was able to shoulder a weak ISM services number. We do have the FOMC minutes coming out later today. Not looking for anything new there. So I don't think there's going to be any new news for Friday morning that the market would trade off of, and all eyes are going to be on the jobs report anyway. So if the jobs number comes out super strong, let's say 250,000, which I'm not expecting, is that going to impact the market? Is this a good news is bad news scenario? I don't really think so. I would prefer to operate with a backdrop where U.S. economic conditions and growth is strong, and not one where economic conditions are starting to soften, and one where the Fed will be forced to lower interest rates. I'd prefer strong growth, keep the rates where they are currently, and let's see inflation come in. I believe that is the best backdrop for the market right now. So we'll keep an eye on the market. We're going to keep an eye on 1OP right now. We've got a little bearish cross forming in here. What would I be looking for? What would get me long? What would get me short right now? Well, on the short side, because we're kind of coming up to the inflection point right here where we could possibly see a pullback, I'm going to be looking for a long green candle that challenges the all-time high. I believe it's at 50.50, so we're only about 8 points away. Let's confirm that. And there we've got the high was 50.50 or 550.12, and there we've got 550.30. So yeah, we're about 5 points away. 550.30 is kind of our number to watch. What I'd like to see is a nice rally up to it on a long green candle, and then I would like to see a long red candle immediately after that. What would that tell me? That would tell me that there's some pretty serious resistance at the all-time high and that we could see a pullback. If I get that formation and a bearish 1OP cross, right now on a day trading basis, I'm fairly neutral. Not overly bullish, not overly bearish. I'm simply looking for stocks that have volume. I'm looking for stocks that are breaking through technical resistance. We're going to take a look at a couple of them in just a minute. So that's what gets me bearish. A test of the high followed by an immediate long red candle. And then I need to see some follow through selling. And it's got to come on heavy volume. Volume right now is very, very light. So I need to see a nice rejection. On the bullish side, what would I like to see on the bullish side? Well, like to see the market just continue to kind of drift and stay near the all-time high, can even creep right up to the all-time high, then I'd like to see a benign bearish cycle. 1OP rolls over, comes all the way down. I get a bullish cross, and we're preserving the high of the day, and we're right near the all-time high. And then I get a bullish cross, and that should fuel a breakout. And if we can get that breakout today on light volume, we should be able to continue to float higher. So at this juncture right now, we're about 20 minutes, excuse me, an hour into trading. So I can't say that I'm really excited one way or the other. I'm going to take a look at some stocks, and I'm going to go into Green Royal Flush, see what we've got there. I have one queued up that I found in one of the searches this morning, and I need to have decent volume. Look at A8. When you go through our searches and you have your column layouts configured with all the different variables that we offer, it's very easy to spot strength. We just look for green dots across the board from a 5-minute basis all the way up to a D1 basis. And right now, AA is looking pretty good. This is going to be my bullish pick of the day. And here's why I like it. So you've got this nice upward sloping trend. You can see how the stock makes a nice move, pulls back, then you get a breakout, new high. Well, now we have this downward sloping trend line right here that's been breached to the upside. You can also see that there is a cup and handle formation right here, and that would be the lip, the breakout right there today that we have. We're going to go into a 5-minute chart. So longer term, we've got an upward sloping trend line here as well. We're above AVWAP-E. We are above the 50-day moving average. We have a stock with relative strength, and we have a stock with a IV of 52, which means that option premiums are relatively high, which means that I'm going to be favoring a selling strategy. LRSI is above 80. So I currently have an order out there to sell the July 19th 39.50 puts at 90 cents. So let's take a look at where those are trading. And the 39.50s are currently 66 cents bid, offered at 76 cents. So I'm looking to do a put right. I'm selling naked puts. And the reason I'm not chasing right now is because there's no real news. You can see this is nice strength in here. You can see the heavy volume. Those are incredibly important variables to use when the market is not going anywhere. The market's not going anywhere. We need to know that institutions are interested in the stock. And that's why we have to have heavy volume today. So I'm not looking, because of my market bias, to just outright buy the stock. I could, but I would rather try and buy it down here below AVWAP-E, which is currently at $39.16. That is also below the 50-day moving average. So if you ask me, Pete, you like this stock? Yes, I do. Would you be interested in buying the stock down here at this level, the support level? Yes, I would, particularly now that I've seen this strength. Okay, well, if I sell these out of the money puts, I could bring in, let's say I bring in 90 cents for it. That's going to generate a return in 3 weeks that's greater than 10%. Okay, I'm looking for a couple of weeks of really light activity here. There's not a lot of news coming out. Would a 10% gain be acceptable to me? Absolutely. And so let's see if we get a little bit of a pullback here in the market. This is a wimpy rally. This is a commodity stock. It doesn't have any fantastic, big, great, incredible news. There's nothing that is impacting aluminum prices today or their production. So I don't have to chase this stock. I can simply wait for any kind of little market pullback. Now, if I get a market pullback and the stock is continuing to move higher like it is right now, then I might have to get a little more aggressive and I might have to settle for, instead of 90 cents, maybe a 75-cent credit. And I'm still okay with that. I'm only 3 weeks out. So AA is going to be your bullish pick of the day. And we're going to be looking for any kind of pullback. And here you can see, look at what the stock did yesterday. What a fantastic move. Look at this stacked green candles. Oh my God, I got to buy it. And then it does nothing the rest of the day. You can see what the stock's normal behavior is by looking at previous 5-minute charts. And you should do this. Absolutely. So when you see a long green candle like this and you get all hot and bothered, take a chill pill. Know that this is a very choppy, very chunky stock. There is no reason to chase anything at the all-time high. So AA, I've got my order working. We're going to see what the market does right here. We're going to watch the stock. We're going to see if we get a little bit of a pullback in the stock. I can also set an alert here. So I'm going to just click on EOD and I'm going to set an alert right here, which happens to coincide with VWAP. And I'll be watching for that pullback. Also be watching for a little bit of a pullback in the market. Let's see what we get. We need to have some volume in this market pullback though, or we're not going to be very interested in it. So let's take a look and see what we've got. We'll take actually, let me answer a few questions here first. And let's see what we've got here. What are my thoughts on Mitch? Bearish call spread. Take a look at that stock, MTCH. So we've got the stock in a definite downtrend. That's good. Got this long red candle yesterday testing this trend line, this support level right here. And we're having to sell the 33.34 July 26, which puts us up into this resistance area right here. Yeah, that would be a decent looking spread to sell with lots of resistance above, which is what we need. We got AVWAP-E, we got the 50-day, we've got this downward sloping trend line right here staying in the way. So yes, I think this is a decent looking trade right now. Let's see if the option premiums are there. And MTCH, we're looking at the July 26th. This is actually from Judson. Thanks, Judson. It's a nice looking spread right now, July 26th. And we're looking at, yeah, you can't get that type of credit right now. You need that 20-cent credit and the 33, well, 33, 34. Look at that option bid-ask spread right there. 3 cents bid offered at $2.21. Here you've got 1 cent bid offered at 32 cents. So these are probably more realistically somewhere in the 25-cent range offered. So that gives us a little bit of an idea. But the fact that these are only 13 cents bid tells me that we're not going to be able to get much in the way of premium for those. And the 32s, actually, that might have been the spread you're looking at, the 30, now 33, 34. You're going to have to play around with this one for a bit to see what you might possibly be able to get. So on the 32, 33, you've got 9 cents bid offered at 66 cents. Could you get the 20-cent credit that we're looking for? Possibly. Where does 32 put me? It still puts me above that downward sloping trend line, 50-day, and AVWAP-E. And actually the open from yesterday is also going to provide us with a resistance level as well, because we know there were sellers there yesterday. So I'd be pretty comfortable with the 32, 33 if you can get 20 cents for it. I think that's a decent spread though. And those options expire before the next earnings announcement. Very, very important. And you can see that the historical option implied volatility is 33. Not real high, I'd like to be above 35 when I sell these spreads, but not horrible either. So yes, nicely done. Is there a lot of sector rotation during times like this? You can see some movement with the market being flat. You'll have money flowing in and out of sectors. I have noticed that XLF, the bank stocks, have been really good. So let's take a look at some stocks, see where some of the action is coming in right now. This is XLF. You can see how it's trying to break through this horizontal resistance level. JPM and BAC were two really hot stocks yesterday, and today you can see how that was a pretty good rejection off of that gap up, and the stock has not been able to make a higher high. It's made a lower high, so there could be a little bit of resistance on JPM today. BAC also kind of backing off, but you can see the strength in here, and you can see those D1 charts. That's a nice technical breakout right there, and then we'll put up JPM very quickly. Good looking stocks. That's a nice breakout right in here. So even though Jamie Dimon said he would not be buying his shares back at this price level, and that's why you got this long bearish engulfing candle on that statement with some follow through selling. Again, those bearish engulfing candles off of a new relative high usually are going to have some follow through to the downside, especially if they come on heavy volume, and that's why it's hollowed out. That was a key bar. So, in any event, those look pretty good. So let's go through, take a look and see if we can find anything else that looks good on a D1 chart. Tiny body candles on the way up, tiny bodied on the way down. The market's not doing a whole lot of anything. This bearish cross is producing a little bit. So I'm going to take a look and see what else we've got. Let me show you a custom search that you must be using on a day like this. This is absolutely where all of you should be going instantly when you start your trading day on a light volume day. Good option liquidity, -2 or higher. It's going to be decent. RVOL, I want to see it above 150%. So that tells me it's at 150% of its normal 20-day moving average. So that is excellent. And that tells me that institutions are in there. These are the stocks that have a chance to move today. Plus, it's through the previous high of the day. That is the first resistance level for every stock is the prior day's high. Why would I want to look at a stock that has heavy volume, but it can't even get through the prior day's high? I'd have no interest in it. If it can't even get through that simple resistance level, I'm not interested in it. And there's AA right at the top of the list. So let's click through this very simple search, see what else we've got. We're going to be looking at the 5-minute charts. Actually, we can take a look at the D1 chart. Nice breakout through these trend lines, high minus, above the 100-day moving average. Yeah, ding, 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 ding. This is the kind of stock that you want to be trading. Okay, big volume. So, got a little bit of a market pullback. What did the stock do? It continued to march higher. All right, so what I can do is I can set an alert. I create an alert, and I'm going to look for an HA reversal. Stock looks good. And I'm looking for an HA reversal M5 bullish. I'm going to add that. And let's see if we get the alert. That'll give me a little bit of a pullback and I can buy that dip. And I would be definitely looking to buy that dip, particularly if it comes down to that 100-day moving average and the stock holds. That's only a $4 stock. $4.11 is where I'm willing to let this stock pull back to. And That's about where VWAP is. Actually, VWAP is $4.03, so not quite to that. I don't want it to pull back quite to that level. So I'm going to be looking for that, and I'm going to set an alert at the opening price of that long green candle, the last long green candle. If it breaks through that, I'd like to know about it. I'll take a look at the stock, see what it's doing. All right, ARKK, take a look at the D1 chart. Nice little breakout here. Higher lows, upward sloping trend line, above the 100-day moving average. Now, this is ARK, so they've got investments. So obviously, some of their investments in the fund are doing pretty well, and that's why it's up right now. Not any great interest there. Nice bullish engulfing candle, but not really anything technically I want to sink my teeth into. IQ, downward sloping trend line above EMA 8, bounces off of this significant long-term trend line. These are our auto trend lines, by the way. Very, very useful in helping us trade. The stock looks like it's ready to bounce here. Is this something I would be anxious to trade? No, not at all. It's a $3 stock. So that's another price parameter that I can enter here. Let's at least get a stock that's $20 or so. And now we've just narrowed our list. And Tesla had an incredible move yesterday, and it's continuing to push higher right now. I do like this stock. There's a big gap up. You can see how it rested right at that long-term trend line. Let's zoom out, see where that comes into play. Right there, right there. And it rested right at it yesterday. Today is breaking through that and also breaking through this longer term trend line as well. So, yes, I see this as a significant move in Tesla. I would be looking to get long Tesla on any kind of pullback. It's a little far out of the gate right now, so I don't want to be chasing it in here. Some of this could be short covering, but I like the move and I like the follow through. So I think Tesla's probably going to continue to perform. KMI, FCX, so those are a couple of metal stocks. And here we can see this is similar to what we saw in Alcoa. You get the pullback, although this stock is not as strong as Alcoa. Pullback and a little bit of a horizontal resistance line right here that the stock is able to get through. And you can see how it's continuing to push higher on heavy volume. Okay, I like that. So let's take a look at AA again. Let's see, maybe we'll start to pull back just a little bit. I'm going to take a look at GLD also because FCX is, and that's why FCX is up. You can see gold is rallying. Well, what's gold doing today? Okay, gold's got a little bit of a compression in here. It's got to break out through this horizontal resistance level. Not too bad. It's been continuing to push higher. Okay, volume on it. FCX might be worthy of a trade. It's a commodity stock. It's a choppy stock. Okay. There's no massive news overnight that there's some kind of big gold find or something. So you don't have to chase commodity stocks. You want to wait for the dip and you want to try and enter on that dip. So what I'm going to do is if I can get any kind of pullback below this little M5 trend line, I want to know about it. Doesn't mean I'm going to trade it. And that's what's so effective about alerts is you can set the alert. And if it doesn't trigger, you don't have to do anything. You just keep it out there. You don't have to monitor the stock. But this allows you to try and buy a dip and try and pull a pullback, try and buy a pullback. You can also set alerts on this like I did previously, where you right click HA reversals, LRSI, 3-8 EMA crossovers, relative strength, relative weakness crossovers. Those are all things that we would want to be aware of on a stock that we're looking to take a position and we just want to see that pullback. So let's see if we can answer a couple of other questions and we'll take a look and see what we've got on the bearish side of the ledger. What kind of action would I be looking for as I'm waiting for Tesla to pull back to go long? The action I'm looking for is I need to have the 8 EMA catch up to the stock. And if you got in early, you could be riding that from yesterday, and you had a nice breakout right in here a few days ago. This was still okay, and this is still okay when it broke through the 100-day moving average. Yesterday, you could have day traded the stock on that gap up. And we've got M5 charts, so let's take a look at that price action. And there you can see how the stock had a nice steady gain, and then it kind of flattened out the rest of the day when the market was moving higher. So for me, I'm not going to trade this stock until I see some type of compression, some type of consolidation. When I see that, I want to make sure that these long green candles, that the halfway point is preserved. If I get a long red candle that goes through the opening of this long red candle, so the low is 234.25, I can click GTC. Let me know if that happens. Otherwise, what I'm going to be looking for is a compression in Tesla where the stock just moved sideways, moved sideways, moved sideways. All of these gains are preserved. Why is that important? Because if this move is a head fake and it's just short covering, sellers will eventually return, whap, 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 drive that stock right back down to 200. The sellers can't knock the stock down and time passes, it is a sign that this supply is being worked off and that buyers are the aggressors, and that compression will give me an opportunity to enter that trade at a decent price, because at that time the EMA 8 will continue to catch up and catch up and catch up as the stock is compressing. And then I won't feel like I'm chasing the stock, because I will know that there are buyers who are absorbing any supply that is coming to market. And that information is what I need so that I don't get in and chase and FOMO a stock like this and then have the rug pulled out from under me and look like a complete freaking idiot. You have to be willing to let some trades go by you. If you got in early and you were able to add to the position, okay, in here, I'm okay with it on heavy volume with the price action that we saw. But at this level, I'm not looking to chase this thing. So that's what I need to see in Tesla. Uh, Fran asks, is there any chance for MU to hit above 140 on Friday? And the only reason that people ask me that question is because they are long the 140 calls, or they want to buy a lottery trade at the 140 strike price. I doubt that is going to happen. You need a 7-point move in the stock on a half a trading session today, no trading on Thursday, and you've got the jobs report on Friday. The stock today, it's actually making a new high for the day. So this is nice. I like that. It has no volume. I mean, look at this volume. It's just abysmal. So no, the chances of that happening are slim to none. And your warning sign on that came during the live event that we did 2 weeks ago when I shorted MU. And I said, this retracement, at the time that we did that live event, we only had half of this long red candle, but I could already see the rejection. It was already a bearish engulfing candle. When you put in a candle like that, get the hell out of the trade. That is heavy selling. You have to respect these warning signs. But I'm going to take a loss on it. Well, take the loss on it. Okay, you were wrong. You chased a stock in here that was way above the EMA 8. And so now you're in a crappy trade, and now you get some heavy selling pressure. FCX is breached below the trend line. See how that works? It's also testing this AVWAP E, and there's your tiny little pullback. So let's see if it can continue to pull back. I had that trend line drawn right there. I'll just continue to put another alert right there, and it happens to coincide with AVWAP or with VWAP. So we'll see what happens. Look at this. This is just garbage right in here now. We're just hovering up and down around that VWAP price level on SPY. Tiny bodied candles, very lackluster volume in here. Let's see what AA is doing. See if I'm getting closer to my entry price on that. And I might not be, but let's take a look at those options and see what I need to do on that. And again, I'm trying to sell the 39.50s. Okay, for 90 cents. I'm going to lower that. I'd be happy with taking 75 cents on this, quite honestly. So let's modify that. Let's go down to all right, we're at 75 cents. There's my offer. Let's see if we get any takers in it. So, that was on MU. Thoughts on Qualcomm? And that's the hard thing about buying and getting long right now. So if I could encourage you to do anything in this video today, it's keep your size small, tiny, minuscule, zero. Those are words that come to mind. And what happens is, I'll tell you exactly what happens because I've been through it so many times and I've seen it happen so many times, is that in here, the market's continuing to drift higher on light volume. And now all of a sudden you're long in here. You're like, oh my God, I've watched this market tick higher and tick higher for the last 2 weeks, and I'm not getting the dip that I wanted to. And oh, I'm just getting so bored right now. I gotta buy something. So you go in and you buy some calls, and there are a lot of people who are like, well, forget this. The trend is strong, and I'm just going to buy right now. And so they load up on long positions. If there's a dip, I can weather that storm. It won't be a problem. Blam! You get a bigger dip than you expected. And now all of a sudden, things are looking pretty doggone bearish. Holy cow. This market could just roll over. I've down 50% on all my positions. You puke out the positions and you're like, oh, I don't even know if this trading thing is for me anyway. I'm never in the right place at the right time. And so you take a big loss on your positions. You can't do anything in here because now all of a sudden your mindset has shifted from, I got to have it. I got to have it. I got to buy it. I love it. The market's going higher to, oh, whoa, this is a pretty big pullback. This looks like the market's going to roll over. Yeah, any little bounce in here is probably going to be a good short. And so you're looking for an opportunity to short, and you're looking for an opportunity to short. The next thing you know, you're challenging the high. You never did what you were supposed to, which was you're supposed to wait for the damn dip. And you were supposed to get super excited about buying right in here above the 100-day moving average. So you jumped the gun here, you lost money here, and then you missed the whole freaking move. The way to avoid that is to not trade in here. Don't trade in here. Even if the market continues to leak higher, I promise you, when the selling comes, it's going to come like that. And this is a 100-point S&P move that particular day. Like on MU, if you ignore these warning signs, These bearish engulfing candles, you are going to pay the price. This is a time to just sit idle. Don't do anything much. I'm trying to sell an out of the money put on a stock that I would like to own. And let's see if we're any closer. I don't think they're going to fill me on that at 75 cents today. Now, there's my offer still on the stock, so or on the option. So we'll see. Yeah, I'll get that fill. We'll see. Let's take a look at some bearish trades. I'll see if I've got some other questions that I can answer. Delta Airlines has been weak. All the airlines have been weak. This is true. Airlines tend to be super, super choppy. I can take a look at all the airlines. And there you can see. Right now, the problem with airlines is I think they've actually had pretty decent business, and oil prices have been fairly stable also. But you can see, yes, how the airlines are in a gradual downtrend. And once they find support, you can see I'm going to short it, I'm going to short it, I'm going to short it. Eventually, when they do find support with this type of heavy selling, they bounce pretty violently. So a little bit difficult in terms of day trading, excuse me, in terms of swing trading moves like this. But yeah, this is pretty nice steady action. You've got support right now at the 100-day moving average on DAL, AAL. Let's see where those major moving averages come into play. They really don't. But this is tough kind of, this is such a gradual little drift lower. So you've got an 80-cent move lower in the stock during the course of the last 2 months. Is that going to excite you? Probably not. You're probably going to get pretty bored with that trade. But I'll tell you what, here is what I would be kind of interested in is if the stock is able to break through this trend line on heavy volume, it's got a shot at maybe getting back into the gap. So I'm going to set a alert here, and I'm going to set an alert here. If we can get through either of these two price points on volume, I've got a chance for a reversal and some possible gap fill in here that I'm interested in. So when I flip through charts, even if there's no trade for me today, there's no trade for me right now, take the 3 seconds and drop the damn alert lines. The next thing you know, could be a month from now, could be 2 months from now. I get an alert and I look at the chart and I go, wow, awesome. That is a significant price point that's been breached on heavy volume, and I'll have an opportunity to consider it. 10 Mo, that's an indicator that I have available, most definitely. It's a good indicator. We don't have alerts on it. I've got a lot of different variables that I think are more effective than 10 Mo. And in fact, one thing I don't have up, which I'll put some of these up, is these are my 10P signals. And you'll be able to see those signals on a chart. We're beta testing this. I like it. I think it's very good, especially if the stock has momentum. And there you can see a beautiful sell signal before the big drop. And in general, AAL has not moved much. But as we flip through charts, you can take a look at where some of these buy and sell signals come in. Let's do that for AA and see where it came in. So yeah, nice little buy there. So you short here, you cover here. Okay, that was a loss. That was a losing trade right in there. But that's been a nice entry point. This was an excellent entry point right here. Just a matter of recognizing that the stock was getting toppy, starting to roll over and taking profits. If the open of that long green candle is violated, I'm going to be out of that trade. I'd like to see these opens of these long green candles preserved as much as possible. And when they aren't, I sense that there's some weakness. Really nice buy signal here. Short, scratch, good entry. So Take a look at the buy signals. I think you're going to really like them. We go into a 5-minute basis, and those buy and sell signals are also available. When you don't want to trade these signals is when you're in a compression like this. Okay. All it's going to do is waffle back and forth, in and out and in and out. So, no, you don't want to use it in those instances, but you can still see some really nice entry points. So, let me take a look at the next question. Do I plan on having more longer term investing? Okay, key term investing, not trading, investing. Investments I consider to be more than 3 months out. Well, why do I make that distinction? What's this magical number? 3 months. What does 3 months mean? 3 months means that it spans an earnings announcement. Every time we have an earnings announcement, that's a snapshot for us. Conditions change quarterly for many, many companies. They provide guidance. So when I start going beyond 3 months, I consider that to be an investment. When you get into an investment realm, you have to be knowledgeable about the fundamentals of the company. If you're inside of that 3-month period, you can focus strictly on technical analysis, very short term trading. So I do swing trades. My swing trades are typically a month or less in duration. Sometimes they'll be 2 months in duration. When we had that big rally from November, I told all of you, I'm like, you want to be long, 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 long. Okay. So we didn't start taking profits on those swing trades until February when the momentum started to wane. And so, that's an example where we were in positions for 4 months, but that had more to do with the macro backdrop of the overall market and what was taking place there. For individual stocks, I tend to stay well inside that 3-month window. So, am I going to do more investing strategies and picks? The answer would be no. I'm going to stay short term for me is inside of 3 months. I like to turn my capital over as much as possible. And I like to be very patient in times like this. And I don't want to be trading when the market's not giving me anything to work with. So we're close to that all-time high right here. Let's see what's happening on an M5 basis. You can see this is a benign bearish cycle. What does that mean? That means that we should be seeing a market pullback based on this indicator, but we are not seeing that. So if we get through this bearish cycle and the market is right near the high, it's going to challenge the all-time high. And I'd be looking for a bullish cross in here with a chance to go higher. So right now, the path of least resistance is higher, but the volume is light. So we've taken a look at the bullish side of the equation. We could take a look at a few more bullish trades. Let's see what's coming up in the scanner now, because these results will change. And let's see if there's anything new. There are a few new stocks in here. Taking a look at K-Web. That's pretty nice. Decent volume, but you can see how that's starting to wane a little bit. Let's see at the, and this is definitely a bounce off of the 200-day moving average and through the 100-day moving average, and that is a pretty steep, swift decline. Very choppy stock, China internet. Okay, so, but that is steady, steady price action there. This stock does look like it wants to continue to go higher. Now, I probably benefiting from the Tesla news. You can see the stock has been sold off hard. It's above AVWAP E. Probably have good volume in this one today. Yes, decent volume, really good volume, and a nice steady climb. This could be a decent long in here. Market pulled back in here, stock barely even budged. Not too bad. Choppy. I want to see that. There's TLT. So TLT is continuing to add to gains. That's good for the market. All right. So LI doesn't look bad and K-Web doesn't look bad. See that little dip right in there. And K-Web is actually even more consistent. You get this little red bar here that's instantly reversed. So looks pretty good. I'm going to wait for more of this bearish cycle to run. I've only got about 2 hours of trading left. So I'm not super inclined to put a position on right now. Let's take a look at the flip side here. So you've got heavy volume, good option liquidity, prices above 20 bucks. I'm going to click once more. So now we're looking for for a low, and this is going to be a tough search. So before I even run this search, this is important, an important exercise for all of you to go through is visualize. What does that mean? Below the prior day's low. Well, that's what it means, below the prior day's low. It's the context that you're missing if you simplify it like that. What did the market do yesterday? The market rallied like freaking crazy. So where would most stocks have finished the day? Well, they would have finished on the high of the day, right? Because the market finished on the high of the day. So a stock that's making a new low of the day, or excuse me, a stock that is below the prior day's low is going to have retraced all the gains from yesterday, which in most cases would be substantial. And you have a market that is trading higher today. These stocks are going to be very, very weak. So let's take a look, see what we've got here. STZ, I'm going to move this out of the way. And there you can see earnings before the open. That is a nice gap reversal. So B1 chart, anything significant, very choppy, but it is below the major moving averages. Probably a very wide bid-ask spread on this stock. And here you'd be looking to preserve half of this long red candle right in here. There's your heavy volume. So any kind of bounce in here is going to get me interested in the stock. I'm not going to chase this though. So what do I do with that? Well, if I'm anxious to kind of do a trade today, I'm going to put an alert right here because I'd like to know if the stock bounces and gets above this point. And I don't want to chase it, but I'm going to put an alert right there. So now it's kind of bracketed and we'll get an alert on it. We'll see if it's going to bounce in here and retrace some of this long red candle. You can see that's the initial reaction, gap reversal. Look at these long green candles here, okay? This thing can bounce, and it probably will bounce. And that's why I don't chase the stock here. This is very, very possible. So let's see what we get when the stock retraces. And right here, we're not able to get through that high yet, so we're just going to keep watching. I am going to put up some other studies, and I'll show you how the 10P signal has performed on the S&P 500. And so yesterday, you can see there's a decent entry here. You're out here. So you basically scratched that trade right here on that sell signal. You're short here. You lost money right in here. You lost money from here to here. But then you're able to make more than that back on that buy signal right in there. So that was pretty decent. But you're able to go through and take a look. We also have specifically for 10P, you're going to see some great signals in here. So you get this long green candle in here, and you get this toppy formation, and now you start retracing, and you get through the halfway point of this long green candle, and you're below VWAP. Okay, now STZ is above, so yeah, it's starting to retrace in there. But in any event, you're starting to see selling pressure and you have technical confirmation. This long green bar has been given up right here. You've got a sell signal. This is a very nice sell signal. You've got a buy to cover here, another short here. That's also a decent signal. So I like this on an M5 basis, but the way that I've been currently viewing this and trading it is to wait for that M15 trade and then to wait for both of them to agree. And so, for instance, you would be having a buy signal in here, and on a 15-minute basis, I know I'm on a buy signal here, so I'm only looking on a 5-minute basis to take the buy signals. Okay, I'm only looking to take the buy signals because I'm on a buy signal on a longer term time frame. So when I go into the 5-minute chart and I look at the price action from in here, I'm only on a buy signal on a 15-minute basis. So I'd buy here, I would scratch here. I'm not shorting. I'm only sticking with what I have on a 15-minute basis. Buy here, I'm out here. I buy here. So these are all pretty much scratches, but that's the one that makes me decent money. That's how I would use that particular indicator. Watch what it's doing on a 15-minute basis, and then take your lead off of that. All right, so we got a few other stocks that are starting to come in that are above the prior day's high. So let's take a look at those. We've got Baidu. So all the Chinese stocks are currently performing well. And AA, we got a little bit of a dip in here. Did I get filled yet? Ah, they filled me. All right, so I am currently short the 39.50 puts at 75 cents on AA. And my plan on that is to do a whole lot of nothing with that trade. I'm just going to let those option premiums collapse for the next 2 weeks. The 19th is about 2 weeks away, so the stock just has to stay above a VWAP E. That will expire worthless, and I will make 10% on that trade based on my naked put requirement. 10% in 2 weeks. Thank you very much. Yes, I would be happy with that. So Baidu just bouncing. This is nice. This is Cenex, another aluminum manufacturer. So aluminum, you can see, is continuing to perform well today. Like that volume, like that breakout. So yeah, I would probably buy this stock if we can get this little market breakout and get this bearish cycle to finish in here. And I start feeling pretty good that the market has a chance to move higher and that this is a decent stock. Just looking through some of the other bullish candidates here. You can see this is the new list, and that's K-Web pulling back right now. So good thing we don't chase this. LI. I'm looking for a stock that has been, and that's the other thing. When you get a market that's going nowhere and you have a stock that has some volume, but it's really going nowhere, then it's just mainly a technical breakout. It's not news related. You just don't need to chase those. And there comes Tesla. Now Tesla's starting to break down and it's starting to test VWAP. This could be interesting though. Tesla has excellent volume, and if this is a pretty good pullback in here, I would have no problem shorting this, but I need to see it get below this price point. And the ideal situation for a short, let's see, we got 2 hours left in the trading day. So my ideal setup here is a bounce that can't get back to this high, and then the stock starts to roll over and fail a little bit. That would be of interest to me. And there I would be looking to buy some puts. So how can I do that? Well, do you see what happened right here? You see how the stock was relatively weak? It's red when OSI is red. I'd like it to go green and then red again. And I want to see what happens during that time frame. If I have a lower high and the stock can't get back to that high, I might have a decent short that sets up. So I'm going to create an alert. I'm going to go in and I'm going to put a real relative strength, and I'm going to be looking for it to be weak versus the SPY on an M5 basis. Wait a minute, Pete, it's already weak. That's right, and our servers know that it's already weak, so it has to go green, And then when it goes red, then I'll get the alert. So stars is continuing to sell off here. So you didn't get a bounce into this long red candle, not even to the halfway point. So this would be relatively bearish. Still don't feel like chasing that stock. And I also feel like the market has a better chance of breaking out to the upside than we do to have a market decline. So I'm not as excited about taking a bearish trade right here, right now. Let's see if Tesla performs though. And I also want to, I have an alert set right here. I'm going to have another alert set. I'm just setting alerts today. Alerts cost me nothing. I have no emotional attachment to that alert at all. It's just a way for me to monitor stocks without having to watch them every second. Not interested there. Win, a little bit of a bounce, nothing there. So, okay, that's what we've got. We could take another couple of looks around here and see what else we got. I'm going to answer some questions right now. Sorry for the delay in that. So, Peter asks how to avoid compression in M5. For example, at the time buy or sell signal print, which criteria do you know if it's in a compression? Oh, that's super easy. What you do is you just draw, and you can see if the candles are in a horizontal fashion and they're not trading, that trending, then that's a compression. Okay, so yesterday or whatever day we're looking at, when you've got this kind of price action, that's a compression right there. We also have variables. So you've got your alerts that you can set on a compression out. We can also search for stocks that were in a compression but are now out of the compression. As soon as you start to see horizontal price movement like this, use that bar as your high. Let me know when it's out. You would use these lows right in here, set an alert at these lows. Okay, now we're out of the compression. I get an alert. I can take a look at it and go, couple of candles out of the compression. Is it going to hold? I need to see some follow through. Whoop, no, here we go. We're right back in it. So if I'm very intrigued and very interested, then I set my next compression level here and I continue to monitor on the downside. So it's just a visual thing. If there's no upward or downward trend, there's no slope, it's horizontal price action. You're in a compression. Avoid mixed overlapping candles. No bueno. Not what we want. No, 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 no. We want nice stacked candles in one direction or the other. Nice. This is a compression. You don't do anything in here, okay? You set your alert right there. Oh, I got a little breakout. All right, what's the market doing? Am I interested here? And that's how Tesla's been trading. So not really fair to look at Tesla right now and say, well, gee, I wouldn't have traded any of this. The market has not been doing a whole lot of anything either right now. So that's one of the reasons you're going to find a lot of stocks compressing. All right, we're inching closer to that high, and I don't mind taking a look at some stocks that we might consider for a long. Let's see if we can find one little decent trade in here. I'm just going to flip through. AA is doing a lot of nothing. You can see stocks that look good on a day like today are all of a sudden they're gonna look great, and then all of a sudden you're gonna have them do nothing. And sometimes they'll even reverse. So let's go in. Maybe I'll buy some futures in here. I think this is going to be a gradual grind higher. So ES, put in a buy there. And I'm going to trade small. So I'm going to do 5 contracts. And I'm going to buy them here. And I'm long at 55.7875. 5 ES contracts. So I'm looking for the all-time high to be challenged, and I don't see anything really standing in the way right now. I've got a potential bullish cross in here. I'm not taking any large bets. If we were going to see any kind of decent market drop, we would have seen it when 10P was in a bearish cycle. And this could be just a gradual float higher. We're very close to the all-time high. I'm going to be watching closely to see what happens at that 550.30 level. For right now, looks like we're kind of going. I just don't want to see any long red candles. I haven't seen any yet today. So I don't mind weathering a little bit of a pullback in here either. I'm just kind of looking for the market to continue to move higher. And let's see what FCX is doing. And there is my pullback. Okay, that is why I do not have to take any big risks. I don't have to chase anything right now. This is a commodity stock, and look at how it's pulling back. So, no trade was the good trade. No trade was the right trade. And I'm looking to see what else I've got here. We're kind of at the hour and 15-minute mark. So, do I really want to do anything? Not really. I've got the futures position on. It's up about $150 right now. I'm just going to click through and see what else we've got. Tesla could present a decent trading opportunity for me today. I want to see this wimpy little bounce in here. So now instead of having an alert here, I can set one right here. Let me know if that price point is taken out. But I don't have to be super aggressive with this trade. And here's something that could unfold is if I see a long red candle here, I'm going to get out of my futures position. I'm going to take a small loss on that. If that happens, I might get this alert triggered and I might have weakness in Tesla. So as the market is starting to show me signs of topping out, the stock might already be topping out as well. And I might have whatever money I lose here on my futures trade, I have the potential to make up for on a decent Tesla short. So that's what my thinking would be right now. I do gold. See, everything that looked great is just starting to pull in. Doesn't look so great anymore. There's not much going on. I'm going to try and answer a few more questions. AA is your trade. Sold a naked put, 39.50, expires in 2 weeks. Make 10% if the stock stays above 39.50. The stock goes below 39.50. I'm happy buying that stock for 38.75. That is my current mentality on that. In general, selling option premiums is going to be relatively difficult right now because the option premiums have collapsed. You're not being properly rewarded for the risk that you're taking. One small move can put you in trouble on those spreads. So I would kind of lay low on those. I believe your better bet is to take a look at stocks that are really weak, find those really cheap options with low historical IVs and look to buy in the money options that are deep, have a very high delta, so you're not exposed to time premium decay. Buy them when they span earnings. Ideally, buy them out into August. Between now and the middle of August, I think we're going to get a dip. And as soon as we get one, those stocks that are already showing weakness are going to continue to falter. But the key is making sure that you have those really super weak stocks. And I would advise you, Tesla. Aha. So Tesla is having a hard time bouncing. And I like that. Nice stacked red candles, decent volume, having a difficult time advancing, lower high. Can't call this a double top yet. Won't call this a double top yet, but I am now watching Tesla. So let's see what we can do on Tesla. And I liked buying some August puts on this. Oh, this looks like it could be. Let's see what we got here. So earnings were fairly recently. So probably August is when we're going to see our next earnings announcement. Yeah, okay. We're starting to get some weakness in here. We're going to do a trade, and I'm going to buy some Tesla puts. And I'm just going to go into the Julys, maybe the 50s, 250s. I want fairly high delta. And those are trading at 1540. So that looks pretty good. I'm not going to trade a lot of size. And I want to see what happens here. I want to see what happens right here. Right now, I'm up about 500 bucks on my futures position. I've got the market testing the all-time high. So I don't need to rush into this Tesla trade right in here. So I'm just going to kind of hold off right now and see what happens. I did buy some CVS puts yesterday in the chat room. And I see those are doing well. There goes the stock. Same type of principle that I discussed with you earlier. Stock is weak, already showing weakness, breaking through all the major support levels through AVWAP-E, could not fill in the gap, resistance at the 50-day moving average. Very, very similar trade to Starbucks. You can see historical IV of 25. In CVS, I'm long the August 16th. Those are the normal expiration, monthly expiration, $60 puts, and I'm long those at $4.50, and they're currently trading at $5. So that's a nice trade. So let's see what happens with Tesla here. I like this potential short that's setting up right now. All you have to do is find one good trade on a day like this, but you have to be patient and you have to wait for it to set up. So that's what we're doing right now. And still watching those options. As you can see, they're $15, $15.40. I am going to lowball a bid here right now. I just want to see, but I do like that trade. So would I take a bearish position with the market making an all-time high? The answer to that would be yes, because I have two positions that are actually offsetting each other. And so I've got a 1480 bid in for these options right now. And you can see buying the Tesla 250 puts at 1480. I really want to make sure that the market doesn't continue to grind higher. I need to see some follow through as it's getting up to this all-time high. I would rather have it go up, sit, go up a little bit, sit, go up a little bit, sit, and just work its way through as opposed to an explosive move through, because then that has a chance of getting whacked right down. So, and here you can see, I'm going to cancel this order. You can see how Tesla is trying to get higher. So I'm going to reset an alert here. And this is what you're basically doing on a day like today. Measure twice, cut once. You want to make sure in a light volume trading environment with a go nowhere market that you have a decent position on. Otherwise, you want to err on not trading in a day like this. In fact, if you can take time off around major holidays, add an extra day on to that holiday, take some time off because you know the trading's going to be lackluster. The worst thing that can happen for a professional trader is that you take time off and the week that you're gone is super, super busy. So make sure that you are around for the week of triple witching. One in March, there's one in June, there's one in September, there's one in December. You got to be around for those dates. You have to be around for the FOMC statements. But the times to take extra time off and take your vacation time, add an extra day on Memorial Day, 4th of July, extra day on Labor Day, Juneteenth, all these holidays, try and bookend an extra day in there, and you'll be able to take plenty of time off. Then obviously, around Christmas, you want to be able to take some time off. And August is another great time to take a vacation. So those are your windows of opportunity to take time off, knowing that the market's probably not going to do a lot. So market's backing off a little bit from the high. I'm still up a little bit on the futures. I've got my alert set for Tesla, not getting anything done there. I think I'm going to conclude this session. And those are the trades that I'm currently looking to do. I'm not going to let my futures position is at zero right now, meaning I haven't made or lost money on it. So I'm not going to let this run away from me because I think this is going to be a better trade for me. I think playing this Tesla pullback, because it's run very, very far. This is not something that I teach in one option, because we're going against the grain. We have lots of relative strength in here, and we're actually fading this move right now. But this is a move that's a bit exaggerated, and you can see how far away it is from the EMA 8. And we're starting to hit some pretty major trend lines in here, okay? So this is a very significant trend line here, right here, that should provide longer term resistance. And the stock is currently backing off of it. Do you think some bullish speculators might have loaded up on Tesla in there? Yeah, I think so. So they need to get flushed out. So that's what I'm watching for right now. I think I'm going to conclude the session today. I will be doing a video on Sunday. Let me see if I've got any remaining questions that have come up, and I'll try and address those. Let's see here. ERM. Yes, Starbucks is a short. CRM. That's a choppy dang stock. I mean, I look at that D1 chart. Every time it looks like the stock is ready to go. This is kind of the choppy price movement I'm talking about. I like this breakout above the 100-day and the 50-day. This is a very nice show. So yes, this is a good trade. Let me give credit to Dylan. Nice job. I like that one. I like that one. All right. Yeah, I like this. I like this breakout right here. I like the fact that the stock has decent volume today relative to the rest of the market. You can see its nice relative strength in here. So yes, if the market can get through the all-time high and continue to do exactly this, just drift, drift, drift on no volume. Now we've only got an hour and a half left of trading. Will it be able to continue to do that? Maybe. We'll see. And I am up $40 on my futures trade. So I am going to exit that. And I'm just going to focus on Tesla. I don't really need to. Now let me put an order in here at 55.80. And I'll let you know when I'm filled on that. So Yeah, I think the Tesla trade could be one that I would get interested in just for a day trade today. And you might find some other stocks that also look good. Keep it light right now, folks. Try and get through this holiday session and this dead spot into July. Then, towards the back half of July, we should see a little market strength that should lead us into the middle of August or so. And then I would get the hell out of the way because we're going to see some seasonal weakness and we've got the elections coming up. If we're still near the all-time high, I think there's a good chance that we'll see a decent little dip sometime in August. Thanks so much for watching, everybody. I hope it got to all your questions. And if not, please leave your comments on this live event video. And I plan to do a video Sunday evening. So we'll see you then. Thanks so much.